Guess who's back? Thank you for joining me, MBI, for what promises to be a very nerdy episode.
Well, we did one on CrowdStrike and Cloudflare back in 2022, I think. So in terms of nerd meters, I think we are already up there. So semiconductors is almost, the flavor of the month. So it almost feels like we are engaging more into what's like in the moment, what's going on, what's the talk of the town. So maybe it's not as nerdy these days.
Yeah, it's much cooler when people are making money with it than when people are losing money.
Absolutely.
But hopefully this can act as a kind of primer, right? Make people curious about it, about the aspects that may not be headline news, but are very interesting about it. So I was thinking that the first place to start, a good context would be to talk a bit about our personal history with semiconductors. And I can start, but I'm very curious about where it started for you. I'm old, right? So for me, it started with my father's 386. Running at 25 megahertz and 4 megabytes of RAM. And I had some friends with like an Amiga and Apple IIc, and like that was my introduction to computers. And immediately it was like a love story for me. And I never stopped being curious about that stuff.
How old are you, Liberty?
So I'm 42. I was born in 82. So that stuff is like early 90s.
Right.
What's fun about all this is it's all connected, right? So the more you learn about software, the more you learn about hardware just by osmosis and vice versa, right? So I was way into like the first FPS games like Doom and Quake. So you read John Carmack stuff about assembly language and optimization, and that teaches you about the CPU. And I just kept going reading like AnandTech and Ars Technica and reading that stuff and learning about it, not even thinking about it as an investment at all. So I came to it first from a technology and nerd point of view, and later on started learning more about these things as businesses. So I'm curious, what did you know before doing the deep dives? What first made you curious about the field?
Very little. I don't have as cool a story as you have. I was, in some sense, a bit fearful of semiconductors in the sense like, oh, it's too technical. Like I'm a generalist, this is like kind of a more sciencey stuff. It would be very hard for me to catch up. I remember back in 2021, I think, in my annual letter to my readers, I specifically mentioned semiconductors as an area that I feel uncomfortable to do deep dives on certain companies, given the complexity and the technical jargons that are associated in all these companies.
It's very intimidating.
Very intimidating.
Few fields are as intimidating as that.
Yeah, but as I kind of did it and did some deep dives, and I think I realized this is probably more symptoms of like modern knowledge that almost all the industries, like we operate in finance, so that's why it probably feels more natural and like more normal. But I think for a lot of non-finance people, a lot of the words, a lot of the languages that we use every day and take for granted can be very isolating, right? It's essentially about, what you are comfortable with, what you follow, what you are interested, what you are curious about. But I think for a long time, I just thought, semiconductors, it's too technical for a generalist like me. It will take months, if not years, to get up to speed and to understand what this industry is about and what people are talking about. What really pushed me to dive deep into this industry, probably in a couple of things. The first is I still do own a lot of big tech companies. So right now I own Meta and Amazon. I used to own Google as well. And basically for a long time, I think you could afford to own a piece of these big tech companies without really understanding what semiconductor is and what's the dynamics between the broader tech industry, between semiconductors, softwares, and internet companies, right? And I think between 2022 and 2023, I started appreciating much more that I think we are getting close to a place where it's not an option to not understand semiconductors.
Right.
Because you might be blindsided by the developments that's happening right now or going to happen in the next 5 to 10 years. Just to give you a concrete example, for example, Meta doesn't really have a pricing power. It's an auction-based advertising model, right? Meta really doesn't decide prices or impose prices, like it's the auctions, right? The advertisers basically fight between themselves to decide on prices. And so that's one side of their kind of, stakeholders. And the other side is basically users, right? It's a free product. So Meta doesn't have any pricing power. Meta basically builds advertising infrastructure. And if for some reason the advertising infrastructure becomes more and more and more expensive,
Yeah.
They can't really pass that extra cost to the advertisers or to users because
if it becomes more expensive without getting better, without the targeting getting similarly better, right? Yeah, that would be a problem.
Yeah. If it gets better, then yes, fine. Like, maybe the auctions get tighter and tighter. The ads become more performant. If those were the case, then ROAS gets better. If those are the reasons why advertising infrastructure is getting more expensive, then that's fine for Meta. But if it's not, if it's just, in the broader supply chain, some people are basically raising prices, that would be a huge concern for someone like Meta. And obviously, Meta is spending like billions of dollars, tens of billions of dollars these days on CapEx. They're buying chips and hand over fist from Nvidia, right? So it definitely jolted me out of my comfort zone and made me realize that this is not a reasonable excuse anymore, that semiconductor is too technical. Yes, I'm not going to be the most expert on semiconductors in 3 years, 5 years, or probably ever, right? I'm not going to be in the top 5 percentile, let's say, of semiconductor investors and experts. But that's not really an excuse, from getting your feet into understanding the basics, right? And as I kind of did that over the last 3-4 months, I realized it actually gave me more comfort in getting into some other technical areas as well. Semiconductors, it's pervasive, it's indispensable. Almost every hour, this podcast that we're recording, we're using semiconductors, right? It's everywhere. It's literally any person in the Western hemisphere at least is probably using semiconductors on an hourly basis, right? And it's not an excuse to say that, it's too technical. Everything is technical these days. Simple companies like Dollar General, there are a lot of complexities in terms of the supply chain and how those things, come together. From a consumer facing, it feels very simple. You just show up on the store and buy stuff, pay for that stuff, and voila, it sounds like a very simple business. But when you realize, okay, how does the whole thing work? It becomes much more complicated, right? So anyways, long story short, and I think, I remember in one of our earlier episodes, I mentioned people are much more willing to say that, hey, I don't understand Nvidia. It's too technical, but very few people would actually say, I don't understand Meta or Amazon or even Google. It feels like we all understand what Google does and Facebook does and and Amazon does, but it feels socially acceptable to say, I don't understand what Nvidia does. Probably we're getting closer to the point where it will be less acceptable to say, I don't understand what Nvidia does. But, we know, if you are following any of these big tech companies, you know how complex and complicated even Meta or Google or Amazon are, because as a consumer, as a user, we see just one facet of those businesses and it feels like we get it, we understand it. And that's not the case for TSMC. We don't really feel like there's a consumer element to it, right? So that's why it feels much more technical. Everything is most of the things are very technical. So if you are a generalist, and if you want to hide from the technical aspects of different industries, different sectors, you will have a very hard time going forward. Realizing that, I thought I should just push myself, get into that zone of discomfort, just be open about it. This is not my area of expertise. This is not. So it will take some time, right? So I started with a primer. I usually do a company within an industry, right? So I don't necessarily feel like I need to have a deep knowledge on the broader value chain to study a specific company. But when it comes to semiconductors, I felt the opposite. I was like, okay, it feels very difficult for me to study just TSMC or Nvidia without understanding the broader value chain.
Yep.
So I was like, okay, I don't need to have very deep understanding or knowledge on the broader value chain or every single company within the value chain. But let's start with just the lay of the land. Who sits where, who does what, just basic understanding what all these jargons mean and all that, right? And I did that first, a general primer. Then I did Texas Instruments, so the analog chips. Then I did TSMC, so the foundry business. And I'll probably do a couple more, probably in the digital chips, logic chips, maybe Nvidia, and maybe some semiconductor equipment companies.
Right.
I'll probably do semiconductor, 3 to 4 semiconductor companies every year for the next 3 to 5 years. I already did 2 so far, if I exclude primer, because I feel like this industry is such a beautiful industry structure. This is an industry with a very rich opportunity set as an investor. The entire value chain has pockets of oligopolies, pockets of monopolies, right? This is an industry that will not become irrelevant. That's almost for certain for the next 10, 20, 30, even 50 years, right? So I will be hopefully alive in this world for the next 50 years. So, obviously, of course, I want to gain more understanding, enhance my knowledge on an industry that's going to be relevant for the next, 20, 30, 40, 50 years, right? In my lifetime. To me, it feels like it's a very high, payoff work that I'm doing. I have started doing in 2024 because I feel like in 2034, 2044, I'll come back to this work that I did in 2024 and basically build my knowledge on top of the kind of groundwork that I have done. That's part of the reason why I like investing. I like being a generalist because I think being a generalist allows me to understand how the broader world works, trying to figure out, putting the dots together of this, a gigantic map that we are kind of navigating through is what makes this job incredibly fun. And I don't want to be that person who wants to avoid stuff because it's too complicated or like I didn't study it in college or whatever.
Yeah, and it's not like it's a 1 or a 0, right?
Yeah.
Even after studying this stuff for years and years, most of it I still don't understand. Like no single person on the planet could understand every part of building a chip, right? But you can still understand a lot of what matters about the industry just from some higher level bits, right? So from understanding a few of those things that are understandable to the generalist or the layperson, you can understand a lot of what matters without knowing every metallurgical processes that go into making these types of transistors and they're switching from 3D, like all that stuff. Like it's cool to read about, but that's not the part that ultimately will make the biggest waves in the industry. And as you say, this stuff is building blocks for every other industry these days. It's like software, right? It's colonizing everything else. And so if you don't try to understand it, there's a big chance that you're going to wake up someday and find out that some industry that you used to understand is now like mostly like software and buying a bunch of GPUs and AIs in there too now and like all that type of stuff.
No, absolutely. And just to put a final point on this, like I vividly remember I used to basically ignore when I read your newsletter, and if you write anything about semiconductors, I just used to ignore it because I don't understand it. I don't understand what you're talking about. I'm an avid reader of your and like Ben Thompson's newsletters.
Thank you.
And Ben Thompson, he also writes about semiconductors. I just used to ignore it because I don't understand it. And now that I have done that kind of groundwork, now I do read whenever you or Ben Thompson or anyone else write about semiconductors. And I understand it. I understand almost 90% of it, right? And again, like, when you follow these things over a long period of time, your level of comfort increases. You come across semiconductors all over the world, everywhere you look and you read and you consume. And because you don't feel intimidated by it, you don't feel like, okay, I don't understand what a fab is, right? So what's the point of reading this entire paragraph? Because I don't even understand what a fab is, right?
Yeah.
Maybe this podcast is all about encouraging people to actually do some work in something. Like I know a lot of people who get discouraged to look at a sector or industry because it's a bubble, right? Or it's hot, right? For example, let's say if you are back in 2000, there's a huge tech bubble, the internet is a fad, like I'm not going anywhere near it. Maybe that was the right decision to be nowhere near in 2000, 2001. But wow, what a costly decision if you just stuck to that philosophy for the last 20 years.
Learning and investing is not the same thing too, right? It takes a while to learn about something. So all that time invested, you'll be happy you did it if there's a crash, right? And now it's time to buy because crashes don't last forever. And sometimes when something gets attractively priced, but if you don't know it, you start studying it. By the time you're up to speed, it's too late, right? You've missed your chance.
I think we definitely in the investment management industry, we have a fascination to only work on things or to only study things that will be worthwhile right now, right? So let's say if you think, I'm not claiming this, but let's say if you assume the semiconductor industry is a bubble right now, then okay, what's the point of studying because it's a bubble? Obviously, I'm not going to buy stocks in a bubble, if you're a long-term investor. So no point, I'll study it when the crash happens. The reality is when the crash happens, when the bears will be so overjoyed and it will feel like, okay, this is a complete sham, like it's a fad, like none of this was real. And even then you would feel like, what's the point of studying this industry? Like people lost their shirts, everybody lost money here. Unless you have the commitment to study companies or industries because you just want to understand things.
Without the intrinsic motivation, you will never go as deep as those that actually are passionate about it, are really curious about it, and will think about it in the evenings and the weekends and read books about, like, if you're purely being a mercenary about it, like, I guess that can be fine for some things, but for more complex things, for example, like, I want to go back to something you mentioned earlier, and it does apply to both what we were saying, right? So semiconductor industry has historically been very cyclical.
Yeah.
And also it's consolidated a bunch. A bunch of stuff has been unbundled that used to be bundled, right? You used to design chips and then fab them yourselves. And now, like, the fabbing has been mostly to TSMC and Samsung. And there's a ton of fabless companies now. So I'm curious if you think that has changed the industry enough that it's now less cyclical. And maybe those big opportunities that used to come every 5 years or whatever, where all of a sudden you have way too much inventory. There's so much inertia in the system. Everybody's building these fabs that takes like 12 months, 18 months, 24 months to build. And by the time they all come online at the same time, whoops, it's too late, right? And the market is flooded with too many chips, too much memory, whatever, prices collapse, all that stuff, right? That used to be very, very common. I feel like there's been a change in recent times. On one side, it's been consolidating, and on the other side, there's all these new end markets that use more semiconductors than before. It used to be mostly consumers or PCs or in the enterprise or whatever. I'm curious how you feel that this thing has been changing, right? That's one of the biggest changes that I've been feeling in recent years.
Yeah, no, you're absolutely right. I think if you look at just the end markets, semiconductor mix, so PCs and consumer electronics, even today, it's still like 55, 56% of total, semiconductors chips. They're like, industrial, automotive, and there's something else. They're each like 14% of the total end markets mix. So it's still like, low compared to PCs and consumer electronics. But those three are like the more high growth. Yep. PCs and consumer electronics are kind of flatlining, barely growing. But those other three are definitely growing a lot faster. So for example, like to give Texas Instruments example, their revenue basically grew at less than 4% over the last like 10 years, right? But if you look at their only industrial and automotive.
Yeah, the mix under the surface has been changing a lot.
Yeah, so back in 2013, industrial and automotive used to be like 40% of Texas Instruments revenue. Today, 75%. And if you just look at how industrials and automotive grew over the last 10 years, so industrial grew at like 9-10%. Automotive grew at like 14-15% CAGR, even though the top line appears to have grown only at 3.7 or something like percent CAGR. Again, this development is, to your point, beneficial from this chips company's perspective, because consumer electronics, PCs, they used to be very short cycle products, more challenging to foresee demands and the volatility of demand was definitely higher, which makes, kind of the bullwhip effect that happens when it comes to that, because some of these companies, semiconductor chips companies, don't really have a direct way to track demand. Like, let's say Apple can track how iPhones are selling. The companies who are basically manufacturing chips for Apple have like, kind of a convoluted window to track that. But industrials, automotive, these are more high growth, and these are very long design cycle. So once a chip is in automotive or in a factory design, they tend to last a lot longer than a smartphone chip.
Especially the kinds of chips that Texas Instruments makes, right? In all these things, there's some chips that you want to be on the cutting edge. You want the fastest thing if it's the screen of the car, right? The infotainment and all that. Yeah. But if it's like a sensor for like a window or a temperature sensor, all that stuff's like, once it works, it can stick around for decades sometimes.
Yeah, I think ADI, Analog Devices, mentions explicitly that 50% of their revenue comes from chips that were on an average a decade old, right? And obviously, like, you have already kind of done your R&D on those chips, and you know how to manufacture them. So, the margins can be really lucrative. Like, one thing that I mentioned, like when we imagine a cyclical industry or cyclical company, we basically imagine what? Like, their top lines are going up and down, their operating profits are going like up and down, margins are kind of, compressing a lot, or maybe even losing money. And then on the upcycle, they're making a lot of money. That's true. That's still true for memory companies, right? So like Microns of the world, right? But for a lot of the companies like Texas Instruments, TSMC, right? Are they cyclical? Yes. Texas Instruments, I think revenue was down 9-10% in like 2021 and 2023, I think. Like even in 2000, for example, when the tech bubble crashed, Texas Instruments top line was down like 30%. And like during GFC, global financial crisis, their revenue declined in 3 consecutive years. So obviously this is a cyclical company, cyclical industry. But I think what people miss that because of the industry structure, because of where these companies position themselves or have positioned themselves over time in the broader value chain, their margins are actually a lot less cyclical. Like for Texas Instruments, even during down cycle, like the last 5 years, they have a couple of years where the revenue declined by 10 to 12%, and they still had operating margin of 40%.
Yeah, that's insane.
How many companies can you find in the world where you would have 10% decline in revenue and still have like 40% operating margin, right? And obviously in the upcycle, they have like, 50% operating margin, right? So there's obviously a difference between their performance in like down cycle and upcycle. But the difference, like, is you are talking about, are you going to post 40% operating margin or 50% or 60% operating margin? Those two seem like pretty good option, right? So I'm not claiming these are not cyclical. These are cyclical companies, but I think people kind of, stretch that logic. They kind of broad brush all cyclical companies together, but you have to take into account the industry structure here, right? Yeah. It's not like because it's a down cycle, there's a flood of like, chips coming in and they're just, selling it for cents and losing money during the down cycle, right? That's not what's happening. Even for TSMC, exceptionally high capex business, so very operationally leveraged business. Depreciation expense is basically 30 to 50% of their revenue, right? If their revenue kind of goes down in a down cycle, obviously like the depreciation expense is kind of fixed, right? You're just dividing it over the course of the useful life. So yes, margins can compress, but again, even for TSMC, since 2003, so almost it's been like 20 years, I think they have always maintained at least 30% operating margin. I have studied, many companies so far. Like, even for MBA deep dives, I did like 48 deep dives so far. And it's exceptionally rare for companies to even post 30% margin in like any normal year, right? And we're talking about down cycle, like revenues going down 10%, 15%, right? And still, these companies are being able to post 30, 40, 50% margin, right? So I think people should contextualize the cyclicality of this industry a bit more. If I have to think from the investor's perspective who think it's the cyclical nature of the industry too much, the industry structure wasn't always like this, right? So in the early 2000s, for example, there were almost 30 companies in the leading edge chip manufacturing, right? Today, it's effectively one, right?
Pretty much.
TSMC.
1.5 right? Maybe. Once in a while, Samsung is kind of there.
Yeah, so we talk about Samsung and Intel, right? But like for all intents and purposes, if you want to do like, to manufacture chips in the 3 nanometer, it's essentially just TSMC, right? They have
and all
90%.
That capacity is bought up by Apple and Nvidia, pretty much.
Yeah,
like
exactly.
Whoever has the highest margin and is able to lock up most of the first round of the leading node right now. I love how you mentioned how the whole industry is basically a bunch of monopolies and duopolies, which sounds great at first, but then like someone told you like, yeah, but if they're all monopolies and duopolies, like how much leverage do they have over each other? And so it's a very interesting dynamic. I can't think really of another industry where there are so many players, but they're all at this point so solid in their slice of the value chain.
Yeah.
From one end to the other, right? There's the people making the picks and shovels on one side, like ASML, Applied Materials, Lam. There's the software player with Synopsys and Cadence. They all pretty much have their niche locked up, which wasn't the case years ago. Like there's a great graph in one of your deep dives where you see the number of fabs from different companies. And it's basically like a descending staircase, right? It's like, there used to be like 30 different companies fabbing chips at the leading edge. And now the leading edge is basically just TSMC. And so for some of the players where chips obsolete very quickly, right? So if you're making a leading edge, like very sexy logic chip or very fast memory or something, and there's a down cycle and you can't sell it, well, 2-3 years later, like the leading edge is advanced, the technology is better, your chips are not competitive anymore. And so that could be a huge loss. But for TSMC, where there's basically nowhere else to go to fab leading edge, customers will come back to you, right? You don't have to do much. And if you're Texas Instruments or ADI, You pile up the chips in a warehouse and you sell them later because they have like a decade-long shelf life. There's not something else that comes and obsoletes them, right? So understanding these differences between the different players and the value chains and finding those that basically fit what you're looking for to bet on in the industry. If you think like we're just at the beginning of this huge wave with AI and whatever, and like maybe the sexiest companies are the ones that are going to make the most money, right? Nvidia and all that, like with like almost 60% free cash flow margins right now, like who knows if that keeps going up. But if that changes, they're going to be maybe hit harder by the cycle than someone like Texas Instruments that didn't participate as much in the upside, but just keeps chugging along, doing stuff, like building more 300 millimeter fabs for later when maybe something happens with China and there's no more. Like every one of these companies has like its own personality, which is, I don't know, I find it very fun to study.
Yeah, no, absolutely. I think, to your point about series of duopolies or oligopolies in like different parts of the entire value chain, like in just, I think a couple of days ago, Jensen Huang, I think Nvidia CEO mentioned TSMC should raise price. Like, where would you find like that you are, the customer is saying, I would love to, I'm okay with paying higher prices for the chips I'm buying. The reason he's saying that because he's so comfortable about his position in the value chain. And I think the power that he possesses to just pass their cost increases to their customers.
Yeah.
Right.
But also it's making it harder for competitors to get fabbing time on TSMC if the price is higher, right? Yep. So it's kind of like also building a moat around the most profitable players.
No, absolutely.
But that's one of the questions about TSMC. Like they recently had, I think, a CEO change or chairman change. They recently had a change, and one of the theories was that they didn't press on their advantage with pricing. They've been basically a monopoly at the leading edge for years now. But they've kept pricing their chips similarly. So all of the value went to Apple and Nvidia and others. And don't get me wrong, TSMC still had very nice return on capital and margins, but they could have done so much more. That's always one of the questions, like when you become basically a monopoly like they are, how far do you go? And if you do go too far, does that causes you to become like fatter and lazier? And does that create a pricing umbrella under which others could come under maybe? But how long does that take? Like it's so hard to figure out like what's the optimal strategy there for them.
Yeah, I think to TSMC's management, defense, if I have to defend them. But the reality is, I think it's not like they have been in this monopoly status for too long, right? So they were kind of behind for a long time. That the company was founded in 1987. Like Intel was like in 1960s, and Intel was ahead for a long time, and then up until like in the mid 2010s, right? So like in 2015, 2016, somewhere around that, where basically Intel started falling behind. So TSMC had to take that lead, but you couldn't be really certain that that's going to be the equilibrium state for forever, right?
Yep.
So they had to exceed them. They had to kind of make sure that they are there, they are at the leading edge. And again, Samsung was also falling behind in more recent years. So it's more of a recent phenomenon, the kind of monopoly that TSMC enjoys.
Oh yeah, it's definitely, surely the past 5 years, maybe in the past 10 years, there could be signs of it. And there's a kind of network effect where the more customers TSMC's have, the more money they have for R&D and CapEx. And so all customers benefit from it, right?
Yep.
There's this kind of effect where Intel or anybody that's fully vertically integrated doesn't get. And so as soon as Intel has trouble, it's like a vicious cycle where, okay, you're losing profit and revenue by selling fewer chips. And by selling fewer chips, you have less to invest in fabs and R&D and CapEx to keep up with TSMC.
Yeah, no, I mean, TSMC used to have low 40s gross margin in like 2000s, and then in 2010s they had high 40s gross margin, and in this decade so far they are at like mid 50s gross margin. So if you think like gross margin is improving, so they are clearly, obviously they price at a premium point for the leading edge chips, right? And they did raise prices, but again the question is that given that their customers like Nvidia, for example, are having like 70% gross margin or even higher, right? So there's a question like, did they...
Are they capturing their fair share of the value they're creating? Because at this point, if suddenly TSMC disappeared, right? How much value would disappear for all of these other companies?
Absolutely, yeah.
I love your title, the most mission critical company on earth, right? That's a good position to be in until we start talking about like problems with China and Taiwan and geopolitics. If that didn't exist, they would be a lot more comfortable, let's say. But maybe that's something to talk about now, right? Because that's another question. It's like, When you start learning about TSMC on the technical side, it's hard not to fall in love because what they've built is amazing. It's some of humanity's most impressive technical achievements, and like it's almost like magic, right? It's really, really cool.
Yeah, I mean, just to put it in context, right? I'm not a very religious person, but it almost, like when you
I know what you mean.
When you read the semiconductor stuff, like, oh my God, my fellow human beings came up with all this stuff, right? Like I'm in the same species, right? So it's truly incredible. Like it's unbelievably humbling. And the fact that obviously semiconductors, silicon is the second most abundant element in the world, right after oxygen. How lucky we are in sense that sands and silicons are so abundant that lets us basically, use semiconductors to improve our life and society and technological progress in itself. So when you think in those terms in a more kind of, deeper way, there is a sense of spirituality here.
My favorite way of putting it is that, when you combine that with AI, it's like we've got thinking sand at this point.
I love that. I really love that characterization. Yeah, thinking sand. When you think in those terms, obviously we think about these things in more of an inanimate objects. I think I saw Instagram Reels, how CPU is made. How could we come up with this? It's absurd. The fact that human beings came up with this, have thought about this, that it's even possible. It's incredible to me.
It's also a great example of the power of incremental improvement, because you could never go from nothing to what we have today.
Yeah.
But when you read about Bell Labs and the first transistors, they were kind of handmade, right? And you would hand wire them together, and everything was at a macro scale, very different from today. But then year by year, you shrink everything, you optimize everything, you change everything, and you fix one problem at a time with photolithography and this and that. And all of those steps together over all those years leads you to here. It's a bit similar to evolution, evolve the eye, right? At first, it's like a cell on the surface of skin that detects darkness and light. That's it. And then stuff changes around it, right? It goes recessed a little bit so you can get some directionality to shadows, and then this and then that. And over millions and millions of years, you have the eye, right? Thankfully, humans work faster than evolution, but it's a similar process of incremental improvement and fixing one problem at a time.
If you think about it, just in Morris Chang's lifetime, when he was born, the entire industry wasn't, the word semiconductor probably wasn't in the lexicon, right?
When he was born, China wasn't even communist. And he started TSMC when he was in his mid-50s. It's kind of incredible.
I mentioned this in my deep dive, but I am absolutely shocked that there hasn't been a movie made on his life. I think this guy probably deserves a movie, and I hope they do a bit of a justice to his life, because he had two separate careers. He spent nearly 30 years in Texas Instruments, right? And then he started TSMC at age 55. And then he ran it in a couple of decades. Then he retired. Then he came back and doubled down on CapEx spree in the middle of global financial crisis when everyone was kind of, reeling. And he was like, no, we are going to go all out and we are going to spend a lot more on CapEx. This is a moment to aggressive and capture market share and be on the forefront of technology, right? And it's just unbelievable story. And the more I studied his life and read about his life, he's still alive. So when he was born in 1930s, like I was saying, semiconductor was probably not part of the lexicon.
Oh, the transistor wasn't even invented.
Morris Chang joined Texas Instruments in 1958. So these are, in some sense, a very young industry. It's not 200, 300, 400 years ago, these things were invented. And you mentioned about incremental improvement, and that's true. But the pace of incremental improvement has been
it's compounding.
Incredible.
It's Moore's law is incredible. And what you say about Morris Chang, right? It's another notch in the great man theory of history, because I think he was in the running to be CEO of Texas Instruments at the time. He didn't get it. And that's one of the reasons why he went back to Taiwan and started TSMC. What if he had been TI's CEO? Maybe the whole world would be different today, right?
Very
Taiwan
different.
Probably would not be specialized in this because they had no natural advantages there. It was force of will that kind of built TSMC. And other semi companies in Taiwan didn't do nearly as well, right? And now there's an ecosystem, there's talent, it's different. But if you look at early years, he really made a huge difference there. As I said, you kind of fall in love, but then you start looking at the situation with China, and that makes it, I don't know, that makes me very nervous, right? Not only for TSMC, but for, as we said, it's the most mission critical company on earth. And so if there's a problem with them, who doesn't have a problem? right?
Yeah.
And I'm kind of curious what you think about the whole export controls on China. Clearly, there's tons of smuggling. There's all these third-party countries that all of a sudden become like some of Nvidia's biggest customers.
Yeah.
Some of those chips probably end up there. And there's always been, but there's industrial espionage, right? It's a lot easier to copy something than to come up with it. So I don't know how much difference all that is making. But I do know that while TSMC, as long as they're clearly in the lead, there's what they call the silicon shield that kind of protects Taiwan, right? And that makes them so mission critical that US or whoever will want to defend them, or at least do more to tear China. But now that everybody's pressuring TSMC to build fabs elsewhere, like in Arizona and Japan, and is that a kind of catch-22 where you think you're diversifying and reducing risk, but you're actually increasing risk? Or we can't know, obviously, but I'm curious what you think about this huge sword of Damocles.
There's definitely a bit of a catch-22 there. Yes, after I did my primer, one of my conclusions was initially that China is unlikely to invade Taiwan anytime soon. But I think, as I kind of thought more and more about it, I kind of, probably would like to rephrase it in a different way. So I don't expect China to invade Taiwan for the purpose of, let's say, acquiring TSMC's technology or IP.
I don't think that everything is so fragile there and so much is dependent on tacit knowledge in the workers' minds that you can't acquire that at the point of a gun.
So, but the thing is, the life is only not about technology or TSMC, or there are many different facets of
And leaders
China.
are not always rational.
Exactly. So yeah, it doesn't have to be rational. So I think when I wrote that, one of my conclusions after doing the primer, I think I was probably thinking more rationally, but I think I may have missed the perspective that not everyone has to be rational.
It's like it shouldn't happen, but it may still, and it could be lose-lose. Everybody could lose from it and it would still happen.
Exactly, right. China is not thinking like, oh, let's invade Taiwan, then we can have TSMC. No, I think that they understand they're not going to have TSMC even if they invade Taiwan, or they will not have independence on semiconductor value chain even if they have Taiwan. But they may have other reasons to invade Taiwan.
Or it could be to deny TSMC to the rest of the world, right? Maybe it hurts the rest of the world more than it hurts China. And they've been working very hard to try to build up their homegrown semiconductor industry. That's been very hard. They're pretty behind. But in 10 years, where will they be? I don't know, right?
Yeah, so, I think the risk is very tangible. I think the risk is very real. To put this in kind of in a perspective or context, if you ask me, okay, is China going to invade Taiwan next year? I don't know. Nobody knows, right? 5 years, 10 years, nobody knows. But when I ask myself, if I come back to the world 500 years from now, would I see Taiwan as part of China or no? I think it's significantly more likely that this invasion it almost feels inevitable at some point.
500 is hard because 500, the US didn't even exist. 500, China may not even be communist by then. Who knows? But 100 years or 50 years, that I could see more as possible.
Even 50 feels like it's more likely than not that an invasion will happen. Again, to your point, it's not going to be a huge benefit. China is not going to be a beneficiary from technological perspective through this invasion. It's unlikely. But yeah, it's definitely going to hurt everyone else. And they may not be in the mood of calculating who is hurt more or less. Maybe the point is everybody gets hurt and everybody has to go to the drawing board to kind of rebuild so many things from ground zero. And when I really think about these things, I come back to what my grandfather had to go through. So my grandfather basically never really moved from his village in Bangladesh. But in his entire life, the name of his country changed 3 times.
Wow.
Right? When he was born, Bangladesh was part of the British Empire, right? Then in late 1940s, it was Pakistan. Then in 1971, it became Bangladesh. But he never really moved at all from his village, right?
Yeah, or even just my grandmother lived on the farm without electricity or running water.
Yeah,
in northern Quebec, right? It's a huge change for not that long.
Not that long, right? Exactly. So we definitely have to entertain the possibility that in our lifetime, we will experience some incredibly volatile periods. That's not a very exceptionally low probability event either, right? It's a real risk for not only TSMC, but also for almost any tech company.
That's one thing you wrote about, that
Yeah.
Like all of the big tech were actually more fragile than they seemed because all the hyperscalers, both as hyperscalers reselling that stuff to others, but also for their own use, right? Like Google is using how much semiconductor, right? Like, so it's very hard to place bets on that type of stuff. Like, okay, buying TSMC or not, it feels like a more direct bet on that, but maybe buying Google is kind of also a bet on that.
No, absolutely. I totally agree. It's a highly correlated bet. I feel like if you own any stock, there will be some correlation. But yeah, it's a very highly correlated bet. But I think the only distinction that I would draw between TSMCs and like the big techs of the US is I think if China invades Taiwan, I think Taiwan stock goes down by 80, 90% or even 100%, who knows, and it never comes back. It just never comes back to what it's worth today, right?
Yeah. Well, I wouldn't say the same for Google or Amazon or Microsoft.
Yes, absolutely. Like, all these big US like Magnificent Seven stocks, they will all be down somewhere between 30 to 70%, let's say. It won't take like years. It'll probably take like 3 to 6 months or something like that, right? So there will be an incredible pain point, I think, for anyone who owns any of these stocks. But I think, yes, like over time, as we kind of rebuild the entire process, I think, it will take years, maybe even decades. But these companies, if they have their core business intact, it's certainly possible that they will recoup that lost value, and it may not be a permanent capital impairment like TSMC would be. So that's the difference of risk that I see. It's going to be incredibly painful for anyone who owns any tech companies that I mentioned. But yeah, for TSMC, I think it's likely to be permanent capital impairment. Even if TSMC exists, maybe they will need more capital infusion. The shareholder structure, the capital structure may have to change. They're not really a leveraged company or anything like that. But it's going to be a shell of a company then compared to what they are today. Even if they recoup that value, it will take significantly longer than any of these US big tech companies.
Yeah. Let's move on to something less depressing. One of the other interesting aspects that I've been keeping track of in the industry is how like every scaled player, the hyperscalers basically are all kind of turning into chip designers themselves over time. So they used to be like Intel and AMD and Logic, and Nvidia came on and pioneered a lot of the GPU stuff, and then ATI followed. AMD bought ATI, and okay, that's a thing. There's memory over there. There's all these players, right? But now we have players that have basically grown up doing other things, and now like Apple is designing its own chip very successfully. Putting them in all of their own product, buying less stuff from everybody else. Microsoft, Google, AWS, they're all designing all kinds of chips for inference. A bunch of ARM chips now are taking over a lot of server stuff from the x86 people. It feels like a big industry change. And I wonder what the mature state is over there, right? Is it going to squeeze out players like AMD and Intel? It's always hard to know because a lot of it depends on all these cycles, right? So there used to be like the PC cycle, everybody rode, and the mobile cycle, and now it's AI. How long does that have to go? Is there a next one after that? Is someone else going to be the kind of perfectly tuned player to benefit from it? I don't know. But it feels like that's one of the big like undercurrents right now.
Anything that can be solved by capital, I think the US big tech companies will definitely take a shot at that, right? If it's not about capital, it's about something else, then that's where things can become problematic. Like, for example, the chip manufacturing, like what TSMC is doing, it's not like Apple can just wake up tomorrow and say, you know what, let's just take out 20 billion and build a fab, like in the US, right? They have $100 billion cash lying in their balance sheet, right? So they can do that theoretically, but that's not how it works, right?
Yeah, even Intel has trouble doing that. Exactly. They have the expertise.
Right, exactly. So, I have this kind of wild theory. I feel like Intel's fab division, I wish that were spun off, right? And I wish that took investment from these Magnificent Seven companies.
Build a kind of cartel to diversify away from TSMC.
Yeah, not only those 7 companies will be the biggest losers if something happens to TSMC. All of American people will be losers too, but they will be the biggest losers. So, for example, when US government is giving like subsidies to Intel, right? All of us are chipping in. The entire tax base is chipping in. But who is going to be the biggest beneficiary if Intel is successful? Obviously, Intel is going to be beneficiary, but then the second order effects is like these 7 companies, right?
Right.
And I feel like they should probably take more risk in that context, right? And they have a lot of capital. You know,
I like that. If everybody chipped in like 5 or 10 billion, that would be a gigantic amount. I think the bottleneck would clearly be other things like talent and all that type of stuff, or just getting through like NEPA and all the regulations in the US to build anything. But that could be like in a crisis, that could be also streamlined.
It's a lot harder to attract talent, like high quality talent to Intel at this point, right? Versus like if you just spun off to a new kind of startup, so like new equity value and like all that, like you have like new stock options.
And focus.
And focus, this is your job.
Maybe even combine it with Global Foundries. Like Global Foundries doesn't have leading fabs, but they have the customer service type of culture that Intel doesn't have because they haven't been dealing with third parties so far.
And it's essentially financed by like a consortium of this Magnificent Seven. Because I feel like, you know, as a shareholder of Amazon and Meta, I feel like it's almost like, you know, if I were Mark Zuckerberg, it would feel like an unacceptable risk that we are kind of, you know, underwriting here. Pretty sure Jeff Bezos and Sundar Pichai and like Satya Nadella are not a huge fan of having such a glaring risk. We are like, you know, tiny shareholders of some of these companies. And even we feel uncomfortable when you think about this risk. Like imagine, you know, what these people must feel when they think about this kind of, you know, tail events. It may happen. Who knows? Maybe Intel is unsuccessful in having like high yield or like, you know, getting, you know, enough customers, and maybe it will fail. And who knows?
Imagine an inverted pyramid where like there's TSMC at the bottom and whatever market cap they have right now. I haven't looked recently, but some hundreds of billions. $
700 to $900 billion,
How much value is resting on that? Say, let's take all of the big techs, like multiple trillions. Then look at everything that's national security, right? Like clearly, if the US had its own leading fabs, all kinds of military applications, like satellite, telecoms, all kinds of stuff would be fabbed there for security reasons.
Yeah.
And that would be part of like, in the same way that in the early days of semiconductors, a lot of the early contracts came from the government, right? Military, NASA, spy stuff, CIA, all kinds of stuff helped basically finance the early days and get them to scale. It would be kind of that new moment for regrowing that industry. I could totally see that because, as I said, right, if there's like, I don't know, $10 trillion of market cap resting on this one company that could go away, it wouldn't be too expensive as insurance to spend like 100 billion or something.
When you think in those terms, like the potential market cap lost, and again, it's not just these 5-7 companies. It's going to be a recession, like deep recession.
Worldwide,
Yeah, people are going to lose jobs left and right. Like, you know, real estate prices will, like everything will be affected, right?
Noticeable quality of life stuff, right? It's almost like, okay, that sounds a bit hyperbolic, but you know how like human progress kind of slowed down and stopped and even went back in the Middle Ages compared to antiquity or something. I could see how there's all these curves on log charts where everything is going better, like number of transistors, speed of stuff, like AI, everything is going better. And if something happened to TSMC, you would see it in the chart. In the log chart, you would see a big bump, right? And trying to prevent that as a net present value that's in the
it's nothing like $10 billion. Every single of these, like, you know, big tech companies have at least $10 billion cash, net cash, not even like, you know, just cash, net cash on their balance sheet, right? You know, and again, like in most of the cases, they're just getting interest on that cash. So if you can solve a tail event with the opportunity cost of like 4 or 5% of yield that you are making, to me, that's a no-brainer, but maybe it's not politically not palatable.
It's probably a coordination problem too, right?
Yeah, could be. Like, you need to see a realistic attempt by China, I think. Like, you know, feels very imminent, like it feels like going to almost happen. Or maybe it's like, you know, once it starts, then things will kind of, you know, come into place.
Yeah, though that's kind of too late.
That's too late. Yeah, I know. It probably should happen now.
And there's the catch-22 too, that even if they start now and they make great progress, is that sending a signal to China that they should act sooner rather than later? Right, you may almost like create the event, and it would maybe have happened anyway.
Could you elaborate that?
Oh, I just mean that right now there's a kind of silicon shield protecting Taiwan. So if China attacks, like everybody gets hurt a lot. If the US builds up like another homegrown TSMC, USMC or whatever, right, and it works and it can fab like leading edge stuff, is all of a sudden like Taiwan on its own because people won't go to its defense, and so China's like, well, now's the time to go.
I think if China wants to invade Taiwan, it's not necessarily going to be because of TSMC. It's like they actually want Taiwan to be part of their country. So if that's the case, then like that's what I'm saying. I think invasion is going to happen, like whether TSMC exists or not, right? Like even if, for example, TSMC were not part of Taiwan, like it's like completely in the US. Yeah, if we're Taiwanese, that's a very bad news. That means we have accelerated that invasion timeline. But for the rest of the world, it's probably less of a bad news. I know it's I'm putting it very crudely, and it's
there's no bad, there's no great choice, right? It's like what's the least bad option?
Yeah, we have basically an option where all the country in the world basically more or less gets hurt, versus another situation where Taiwanese people get hurt, right? So it's not great to have those two options, but unfortunately, that's the one we are dealing with.
I'd love to talk a bit more about Texas Instruments, because I think it's another very interesting company that has so much history, right? It's like the OG in the industry. Like we mentioned, Morris Chang came from there, but they invented the integrated circuit there. The transistor was invented at Bell Labs, but it was kind of perfected at Texas Instruments largely. They have all their own fabs now. They're moving their fabs from 200 millimeter to 300 millimeter wafers, which gives them like better gross margins and better economics. They're doing all kinds of interesting things. What stands out to me a lot is how, as capital allocators, how transparent they are and how clear they are. And they have these like call where they talk about just capital allocation, basically. It's like by segment. It's like, we're going to reinvest more R&D here and the returns there. And I kind of wish every company was that clear. I don't know how you feel studying Texas Instruments. How do you feel about that aspect of them?
Yeah, before I answer that, I just want to clarify that I think I mentioned before that in 1958, transistor was invented in Texas Instruments. Actually, that's integrated circuit, IC chip by Jack Kilby. But they have a separate capital allocation deck, presentation that they do every year with investors, right? With analysts. I just wish I could send that presentation to every single company that I personally own, just to see how to communicate with investors. And the clarity of thinking. It's so pathetic that so many of tech companies still think about buying back shares to offset dilution.
Yes.
I don't know, these are exceptionally highly paid executives, and if they make a basic math mistake, right? I actually don't understand why analysts even don't push back against that. They just take it, it's fine, it's right or rational. It's not, right? So, but Texas Instruments have incredible clarity in terms of communication and have a very systematic way of thinking about capital allocation. They are not buying back shares to offset dilution, right? They are not buying back shares for the sake of it. They tend to be more opportunistic. I think last 20 years, they generated $100 billion of operating cash flow. $5 billion of that was spent on stock-based compensation. $25 billion was capital expenditures. And the rest was basically returned to shareholders through buyback and dividends, right? What I really liked about, I think efficiency, I know Mark Zuckerberg talks about efficiency in 2023. He found religion on that. It's unfortunate that he had to find religion after, the stock was decimated. I feel like it should be the normal course of operation of a business, right? And that's what you see when it comes to Texas Instruments. In 10 years, 2013 to 2023, their gross profit increased by $5 billion over that period, and their operating expense was almost flat. I don't think I've ever seen that.
Yeah.
Can you grow your gross profit by $5 billion without raising any operating expense over an entire decade?
And it's a manufacturer, right? It's not like a software company that can just print bits.
No, absolutely not, right? So, and it's possible only if you take great care of how you are allocating capital. So, for example, like I was saying, their automotive and industrial segments was growing at almost low double-digit CAGR during that period, and they were investing in R&D in those particular segments. But then that used to be 40%. So, the 60% of the revenue that they had in 2013 was more very slow growth, or even in some cases declining, and they weren't really spending much R&D there.
Reminds me of Constellation a bit, where some business units inside of the company may be runoffs or just milk for cash. Others that are getting great returns or organic growth are being invested in. And so if you look at just the aggregate, the top line, it's easy to lose track of what's going on underneath and what's creating more value, right? Yeah. But if you look at the margins are moving, that's where you see something is happening. It's not the same mix underneath.
Yeah. And frankly speaking, this is partly why I was kind of surprised that the activist investor, Elliott, came after Texas Instruments, I was like, there are so many companies in the market right now, especially in tech companies, who would probably get benefited with some activism, right? With some activist investors coming into the board. But Texas Instrument feels like, at the bottom of that pile, where the management needs some activist shareholders to tell them what to do. I think they take great care, the way they communicate, the way they even read the very first 2 pages of their 10K, you'll get the sense, what they're about, how they think, and how they think about capital allocation, how they think about efficiency, how they operate for long-term investors, right? Who cares, the hedge fund is losing some money in the next quarter or two, right? And obviously, like I said, this is a cyclical industry. You can't really know what 2026, 2027 revenue is going to be, because that depends on the cycle, it depends on the economy, that depends on the inventory cycle that you will be on, right? And for them to manage the business, assuming what the top line is going to be in 2026, 2027, rather they know this is a secular industry. Like I said, chips will be around. And the product they sell, it's not like they're selling groceries that if they don't sell tomorrow, it's going to be rotten and it's going to be sunk cost, right? That's not the case. So they will be able to sell these chips later when the demand comes back, and the demand will come back because of the kind of industry that they operate in. So the only risk that I see, it's not that they're spending on CapEx, but they're spending on CapEx because of the CHIPS Act, right? Because of the subsidies and the tax credit that they're receiving from the government. And there is a timeline associated with that. So it's not like, they can just choose to delay it at some future time. The risk is definitely in some sense associated with China again, because China is also trying to be more reliant on homegrown companies. And they don't have as much, general purpose, broad suite of SKUs like Texas Instruments does, but they tend to be more aggressive in terms of pricing. But their product portfolio is more limited. But if it's a government mandate, for example, hey, if there's 2 alternatives, one from Texas Instruments and one from this Chinese company, you have to choose the Chinese company. Something like that, it doesn't even have to be explicit. It can be just a nudge from the government, right? And then China is 20% of revenue for Texas Instruments. So that's definitely a source of potential risk for them.
No, I thought the letter from Elliot was very unique in that it's an activist letter. And usually when you read those, it's the sky is falling, right? Basically, listen to me or everything's going down. And this one was praising Texas Instruments for pages and pages.
Yeah.
And basically at the end, it's oh, by the way, we'd like you to kind of modulate and be more flexible on CapEx, right? But everything is great. Yeah. Aside from that, it was very interesting.
It's a good letter. They're not trying to sound too short-termist, but at the same time, I feel like at one point they mentioned consensus 2026 revenue is this, and who knows what's 2026 revenue.
They always over extrapolate the present, right? So when it was going great, everybody expected it to keep going, and now it's slowing down, and everybody's
even they mentioned consensus estimate used to be this, and now this. If consensus estimates can be wrong a couple of years ago, why can't they be wrong again in today, right? So for a company to rely on what's the consensus estimates is and take any decision, not just this type of decision, any decision based on consensus estimates 2-3 years out, to me is fallacious. And at the same time, they did mention in their letter that what they're suggesting will still allow Texas Instruments to enjoy the tax credits from the CHIPS Act. But they didn't really elaborate on that. I wasn't really sure I understand why or how, because at least the way Texas Instruments describes or explains, it feels like a very time-bound. And even the CHIPS Act people also explains it that way. So it's not and they have to promise a certain thing. I listened to some podcasts on CHIPS Act from people who are taking these decisions for the CHIPS Act. And I think they clearly mentioned they are trying to contribute 5 to 15% of the total investment that the company is making, right? So imagine the government is giving you 5 to 15% of the total investment, and you are saying after few quarters, hey, my consensus estimates are down, so I'm not going to go through it, or I'm going to delay it, then you'll be probably in the black box from the government.
Texas Instruments has a long history of being bargain hunters and contrarians and investing during down cycles, and while others don't want to, right? And that never feels great at the time.
Yeah.
But it usually turns out in the long term to have been the thing to do, right? I think it was in the GFC that they bought a bunch of used instruments and Like they filled basically fabs with equipment that they bought for like pennies on the dollar, right? And that turned out to be great. They do M&A once in a while. Most of the time they get pretty good prices. I think it's been going up a bit over time, but they don't do a ton of M&A. I think Analog Devices has been doing more of it. But generally, I would tend to trust them to know their business very well in this case, and to probably be thinking also that there's optionality in building all this capacity right now in case something happens with China, right? So there's all this competition from China, but say that something happens with Taiwan, something happens, whatever, right? The relations between the US and China get even more strained. And all of the restrictions and export bans and all that, they get broadened to not only leading edge and AI stuff, but all kinds of other stuff. It would be great for Texas Instruments to have all of this fabbing capability in the US at that time, right? If a big competitor goes away. I would tend to trust them to invest stuff that's going to get a good ROIC. Maybe Elliott has a point that they could be more flexible about it, but there are such long lead times with everything and inertia. That's not the kind of stuff you can turn on a dime anyway.
Yeah, I'm not sure whether I mentioned this, but I just do want to disclose that I do own Texas Instruments in my portfolio. But yeah, I totally agree that Texas Instruments does have that optionality. Like if something really, that tail event that we are talking about, I think Texas Instruments is probably going to be very few beneficiaries if such a tail event comes to fruition. Again, it doesn't even have to be a total invasion, like you are saying. Even the relationship between China and US, if it just continues to deteriorate.
It could be tariffs on Chinese chips, or it could be anything.
Yeah, right. If it just continues to deteriorate, that can itself be enough for companies to retreat from China and be even more reliant on Texas Instruments. And again, they are building their inventory. I think the inventory on days went from 110, 120 to 190. So they are definitely building the inventories. If something happens, they will be able to deliver it quickly. And I think they are also expanding their capacity even more. So to the extent that the relationship between China and US deteriorates, and to the extent China's probability of invading Taiwan increases, because the perception increases, then I think Texas Instruments is probably going to be a beneficiary of that.
I'm doing this way backwards, but I think for those who are not familiar with Texas Instruments, I want to give an overview of what they do, what makes them special. And this is a pitch. If that sounds interesting and you want to know more, go subscribe to MBI Deep Dives and read the whole thing. There's a lot more in there. But what's cool about Texas Instruments and Analog Devices is similar, is that they're specializing in analog chips. What that means is most of the chips that we hear about, the really sexy ones, like a CPU or GPU, Nvidia, Intel, they deal pretty much entirely with digital signals, right? Ones and zeros coming on one side, some logics, whatever. Something happens to those ones and zeros, they come out on the other side, something happens. With analog chips, you're dealing with what you could describe as the real world, right? So there's a temperature sensor, a speed sensor, a pressure sensor. There's a radio wave signal coming through an antenna, and you have to take that analog signal from the real world and then convert it to digital, or maybe do something analog to it too, make something happens with that analog signal. And a lot of those chips, like Texas Instruments has thousands and thousands of SKUs and different products.
Yeah, I think 80,000, something like that. 80,000
it's insane, right? And they're selling a lot more of them directly now on TI.com.
Yeah, 75%.
They've been around forever, so they have the 2-letter domain name. And so all of these chips that they sell, a ton of them are like 50 cents, 75 cents, a couple bucks, right? They don't have a big, sexy, like the new Ryzen by AMD or the new Hopper or whatever, right? They don't have that stuff. But this super long tail of chips, they're hard to make in the first place, but once you design it, you can sell it pretty much forever, and it gets designed stuff by engineers. So you make a washing machine, and some engineer is going to look at a catalog of parts, and they're going to design in 10 chips by Texas Instruments, right? So if a competitor wants to come in and compete on one of these chips, it's maybe investing maybe millions of dollars to recreate that chip that they're going to sell for $1, right? It's very, very hard to compete with that kind of catalog. And it's still done. And some of those chips, it's worth it and are higher volume and higher price and all that. But there's still this huge long tail that once someone does it, there's probably very little reason for a competitor to offer a second variant on it.
Very hard. Even for incumbents, if Texas Instruments wants to take share from Analog Devices, in the next couple of years, it's going to be super difficult. And part of the reason why Analog Devices decided to acquire a bunch of companies over the last 5-7 years, because even for the Analog Devices, the nearest competitor of Texas Instruments, again, full disclosure, I also own Analog Devices. So for them to participate in this kind of in a growth story of industrials and automotive segments, they had to basically acquire a couple of companies in linear technology and Maxim integrated, right? They did over the last, I think, 5 to 7 years, they acquired this couple of companies. Now they are they're almost at similar size of Texas Instruments. I think they're like at 70%, 75% of Texas Instruments size. They used to be like at 20% size like 10 years ago. But thanks to these acquisitions, they are now almost getting closer to Texas Instruments size. I couldn't really figure out what's the overlap between these two companies.
Yeah, I wish I knew that too. That would be interesting.
Could be because they are just, going for separate sockets and separate devices and instruments. It's hard to figure out what's the exact overlap, but they are, Analog Devices and Texas Instruments are definitely competitors.
Yep.
Analog Devices actually explicitly mentioned that I think roughly 5 to 10% of their revenue comes from chips that were designed like before 2000.
Wow.
Right? They're still getting revenue
in
from
the tech world chips. That's like 200 years old.
Yeah, exactly. Absolutely, right? So that's part of the reason why I really like this industry. I think the ROI on the R&D is just so much higher, right? Because you can just enjoy the fruits of that R&D for years and years, decades, right, later. But on the other hand, the digital chips, the logic
a CPU is harder to design. It's way harder to design. And then a couple of years later, it's in the bargain bin somewhere and nobody wants it.
Right. And then the next thing comes along and then you do that again. So it's a more like Red Queen's race, I feel like, when it comes to the CPUs and GPUs of the world. Even Nvidia is talking about launching something every year, right?
Yeah, on 3 different chips and they're insane.
Incredible. It's great. It's unbelievable that they are actually executing that. It definitely boggles my mind that they are being able to execute that kind of time, cycle.
Yeah, if they miss one or two in a row, that could be terrible. That could them, be terrible. Right? One more bottleneck on competition for the analog players is that, say you look at the company that Analog Devices acquired. I don't remember exactly the valuation and everything, but say you think, okay, right, I could build all of that catalog back for less money than it takes me to acquire it. So I should grow organically. It's like, where are you going to find all the analog engineers to do that? And how long is that going to take? It's basically impossible at this point to scale up with just capital, right? It's a different skill set than a lot of the other digital engineers. They're probably not as highly paid. They're definitely not as highly paid.
No, they're not.
So that may be a problem for the industry. Maybe they have to, if that becomes too much of a problem, maybe they have to change that over time and that could be some pressure on margins. But generally, it feels like it's also part of the moat.
Yeah, the kind of capacity Texas Instruments is building, so not sure that their revenue will be 45 billion, but by 2030, their capacity will be able to reach around that level, at 45 billion. If there's demand, they will be able to produce $45 billion of chips.
That's a lot of $1 chips.
Right, exactly. Maybe if their revenue keeps growing, there will be more leeway for them to pay people better, right? I mentioned that the OPEX was kind of flat over the last 10 years, but even if you look at OPEX per employee, it went up by only at 1% CAGR. That feels
wow. In that industry, that's nothing.
Yeah, that feels kind of unsustainable. I don't think that's going to be the case for the next 10 years. You're absolutely right. I know it's definitely a lot harder to find these analog chip engineers, right? They're basically trained on the job. So it's not like many of them basically studied analog chip engineering, in school.
Some describe it as like black magic. You kind of have to do it and apprentice under existing sorcerers.
Yeah. That's why, Texas Instruments have a lot of homegrown talent. They apparently rarely hire from outside. So they basically hire fresh graduates, train them, and try to retain them over the long haul. There has been a bit of an issue there, just like probably every other company. Turnover rose during post-pandemic era. But even if you compare between ADI and Texas Instruments, turnover rate was higher for Texas Instruments, which I think was a bit of a cause for concern. So I think I have heard. So they used to not even pay RSUs to their employees. Now they do, but still not very much. They have started to pay some RSUs to engineers. So, so I think going forward in the next decade or so, I think their OPEX per employee will probably have to go up a little higher than 1% for sure.
We're getting closer to the end, but we focus mostly on TSMC and Texas Instruments because that's the two that you did deep dives in. But I want to do a kind of lightning round or open it up because I'm sure while studying those, you found other companies that you're like, someday I want to do a deep dive on that one, or that one is very intriguing, or that one I really don't understand, right? Any others that feel particularly interesting in the field, like ARM or Qualcomm or Broadcom or like, I don't know, anything else?
I think I mentioned like in the first probably couple of minutes, it's just such a rich opportunity set. Like, at one hand, you have like the EDA tools like Synopsys and Cadence, right? Then obviously you have Nvidia, AMD, Intels of the world, like in the logic chips. Then you have memory like Micron and SK Hynix. And you have like the equipment manufacturers, right?
Yeah. Applied Materials,
KLA, ASML, Lam Research, obviously another great company. And you have obviously the chip manufacturers, TSMCs of the world. I've looked at that and I told myself, oh my God, I have like at least dozens of deep dives waiting for me.
It's a buffet of deep dives.
Absolutely. So I'm really looking forward. Like, yes, I definitely plan to study every facet of the value chain. I'll probably do Nvidia, AMD, and then some like equipment manufacturers. But even then, I think, there's still more. I think I calculated it. There's probably good like 20 companies that I feel like I should do deep dives over the course of like the next like 5 to 6 years. So it's like a kind of a long-term project for me. Like, the couple of industries that I think that kind of easy to bet that the industry will be around like in some form or capacity. One is like semiconductors, the other is healthcare, right? The two industries that I didn't really spend much time yet. So these are the couple of areas that I want to build some expertise over the course of next like 5 to 10 years. Yeah, obviously I'll also do some other companies as well. That goes like, I did notice after like doing 3 semiconductor companies, like if you asked me to do another one, I'd probably feel a little bored. Again, this is probably, just my generalist brain. I don't think I have actually looked at like 3 companies from the same industry for like 3 consecutive months, right? So, but as I kind of space it out and do it like over 5.
You're thinking long term, like Texas Instruments, like 5-10 years. That's a good time frame.
Yeah, exactly. So yeah, I'm looking forward to it actually. Like I have enjoyed what I have worked on so far.
Awesome. Looking forward to it. Thank you for doing this. Anyone listening, if you want to learn a lot more, because we only scratch the surface, you can go on MBI Deep Dives. You can just Google it. I highly recommend checking it out. Anything else to add before we go?
One thing that I should mention here is we kind of have this discussion, kind of 2 friends chatting. So we didn't really do like usually if you're like a proper podcast episode, you would probably ask me, what is a semiconductor? Like, what is an analog chips? Like, we didn't really follow any sort of like, so if you have no idea about semiconductors, it can be a little difficult to follow, like, what we're talking about. But at the same time, if you are interested, there are a couple of things that I can suggest apart from MBA deep dives that, Liberty mentioned. But I think, I can probably suggest a couple of books. So Chip War. Again, like, I feel like Chip War, I just want to double down on a particular point. I think it has become a book that kind of, reached a popular status. So everybody has it. Everybody has their own bookshelf, but I'm not sure everybody is reading it, right? but I think it's like in Stephen Hawking's Brief History of Time. Like everybody has it on their bookshelf, but because it's kind of, intellectually prestigious to have it. But I think, it's a very good book. If you are interested in semiconductors, I started from almost near zero, so I can probably share how I kind of navigated. So I read that book, great book, gave me a much better understanding of the historical context. Like obviously, if you just want to study these companies and study their 10Ks and the accounting transcripts, you don't really get the historical context as much, right? Chip War does a phenomenal job in getting you up to speed on the history of the industry. So that's one. The other one is because Chip War doesn't really go too much into detail of the technical aspects, right? And I'm not saying it's absolutely essential for if you're an investor to understand all the nitty-gritty details of the technical aspects, but I think there's a book called Understanding Semiconductors. I forgot the author. That was also a good book. There's not a lot of formula or anything like or math. It's a technical book written for non-technical readers. So yeah, I enjoyed that. So those are the 2 books that I would suggest if anyone who is kind of newbie or novice in semiconductors and trying to understand what this is all about.
All right, I'll throw one in too in that case. There's a book called The Intel Trinity, how Robert Norris, Gordon Moore, and Andy Grove built the world's most important company. And it's about the history of Intel, but through that, you kind of get the history of the whole industry. So a useful place to begin. All right, my friend, thank you so much for doing this. This was a lot of fun. Until next time, bye-bye.
Great. Thanks for inviting, Liberty. Hope to come back again.